Good morning, traders. It's the 27th of January. I'm Joe Neighbour from Signal Centre talking bull. We've almost made it to the end of the week. Hope it's been a good one for you all. Steve will be back on Monday, so it'll be the last day you have to put with just me on my own. We have two opinions from next week on what's going on with the markets, but I do appreciate everybody that's tuned in over the past couple of weeks to support and get involved and post up on the streams what markets you're looking at. It's been a pleasure to go through those for you and offer some opinion. So let's do the same again today, shall we, to wrap up the week? Let's first of all look at the latest headlines over the last 24 hours and see what's been moving markets. So yesterday, it was all about the GDP number from the US, and that came in pretty solid. According to the first reading, the US GDP increased at an annualized rate of 2.9% for the fourth quarter of 2022, sorry, from the fourth quarter of 2022, from 3.2% the previous quarter, and it was above the consensus forecast of 2.6%. And consumer spending increased at a slightly slower rate of 2.2% from 2.3%. There was a positive contribution from government spending with a technical boost from trade as imports declined, but residential investments declined as well. But all in all, the number seems positive, and we saw a decent reaction higher from that, particularly from the US equity markets. We did see the US jobless claims come out as well. We saw them decline. They declined to 186,000 in the latest week, down from 192,000 the previous week, and also below the consensus forecast of 205,000. The dollar edged a little bit higher as a result of all the data that came out yesterday. It found some support just above the 9-month lows and secured a limited recovery following a batch of US data releases. We've seen some inflation numbers from the Asia Pacific region overnight. The Tokyo core inflation is at a 40-year high. The headline inflation rate increased to 4.4% for January from 4% and above the expectations of 4%, while the underlying rate increased 4.3%, which was the highest rate since 1981. The data maintained expectations that the Bank of Japan would tighten monetary policy later this year, which underpinned the yen. In terms of the UK, we've had some weak UK retail sales data out. The CBI retail sales report recorded a headline reading of -23 for January from 11 previously, and that was well below the consensus forecast of -5. Retailers also expect sales to decline in February, but at a slower rate. Later on today, we've got some more US inflation data. The latest US PCE prices data is due for release later on. The consensus forecast there are for the core year-on-year rate to decline to 4.4% from 4.7% previously. The Chinese markets have been closed all week, and that will have had an impact on the global markets, as without their participation, it can keep things a little bit muted, but that's due for reopen on Monday following the Lunar New Year celebration. So we'll have that to look at on Monday as well. So I'm going to get into some markets now. If anybody's got any requests on specific markets that they're interested in, or are on their watch list, or looking for some opinion on, if you're stuck in a trade, please feel free to post it up in the stream, and I'll do my best to cover those markets as well and offer some impartiality on those markets. Okay, so let's take a look at cryptocurrencies to start with. Let's just bring up the charts, and I need to be looking at this one here, which is the Crypto 10 index. So this is the top 10 cryptocurrencies by market cap combined together in an index. So it gives us a pretty good indication as to what the cryptocurrency space is doing. And prices are kind of stalling a little bit, really. We did see a breakout of this downtrend, which occurred actually last Friday. And throughout the rest of the week, prices have been pretty much flatlining at the upper end of the resistance at 73.49. So attempting to break higher. Following the break of the trend, I would have expected to see a decent move to the upside, but we haven't quite seen that yet. Maybe that's just because we've got the Lunar New Year celebrations in China, and that's not we're not getting any follow through from obviously one of the most populous countries in the world. Maybe not. Maybe it's just a case of we've had a decent move higher. We need to consolidate some of these gains, and we're going to see a pullback potentially to around 6915 before a continuation higher. If we take a look at Bitcoin, that's on the front foot today, up by 0.15% as things stand. It's kind of a similar chart that we've broken out through a decent level of resistance here at 2155, but prices are just stalling again. Some really long-legged candles that are forming without any real direction being posted. But clearly, the trend in the short term is bullish. But given that we are seeing a bit of a stalling here, I wouldn't rule out a pullback to test this newly formed support at 21555 before potentially putting in higher prices. So obviously this trades throughout the weekend, so we'll see what happens come Monday. But we do have, as I say, a stalling price action in the very short term here. Okay, let's take a look at some commodities then. A couple of requests to look at dollar rand today, so I'll get to that in a bit. Let's take a look at these commodities first. So let's take a look at gold. Continuing to grind higher, as we've spoken about throughout the course of this week. We've got this uptrend line that continues to hold. Yesterday, we posted a bit of an engulfing candle, so we engulfed all of the previous day's gains, and we're posting some losses today as well. That's due to the strength that we saw in the US dollar. But while this uptrend continues to hold, there is scope potentially for higher prices and for dip buyers to step in on pullbacks to this trend line as they have throughout this period. If we do get a break of this trend line, then that could trigger further losses to the downside in a corrective manner. And I can't rule that out either, given that we've seen such an impressive move to the upside. Above current prices, we've got resistance at 1972 to 1973, which is the 78.6% fib level of this entire down move and this entire correction up. So that may provide some resistance as well in the short term. All in all, I think it's a bit of a difficult one. So maybe a pullback towards 1914-ish may attract some dip buyers for maybe a move back up to that 1973 level, but do be careful. If we do get a closing break below this trend line, then it may trigger further losses. Let's take a look at silver. So this has been trapped within this range again for some time now, really, going back to mid-December. We can't seem to break out of this, and every time we get to the upper end, it offers an opportunity to sell. Every time we get to the lower end, it offers an opportunity to buy. So the range is very tight. It's not particularly big, the lower end being 23.11, the upper end being 24.30. We do have resistance above 78.6, which is at 24.93. So I think upside could be fairly limited in the short term. But if we do get a breakdown from this small range that we've formed, then that could trigger further losses. And we could potentially see a move that measures the distance of that range projected lower, which would suggest prices may fall to around 21.92. But we need to see a break of the trend, the channel, the range, before we can start making any assumptions about where price may go. So more range bound action on that for the time being. Let's look at oil. So looking at Brent crude, we've been talking about this bearish channel, and until we break that, it looks as though prices may continue to trade within this range. So a break above 87.95 could trigger further gains towards 97.96, and that would also see a break of the channel as well as this horizontal resistance. If we get a rejection here and a close below 86.05, then that may suggest we'll get further losses, maybe back towards these previous lows, and that the channel will continue to persist. If we take a look at Brent crude, we can see that there is maybe some sort of bottoming formation taking shape here. Needs to do a little bit more work before we can get too excited about that. Ideally, break cleanly above this 83.66 level, which I've got as resistance. We have broken out of the channel formation, but it's hardly being impulsive and dynamic and suggesting that there's a wave of new buying coming in, which is what you want to see when you get breakout points in markets. So I'm a little bit concerned about that one. So I'm not really ready to commit to that on the long side until we can get a firm break and some real evidence of some buying support, which we don't have at the minute. Natural gas down by 1.4%. Again, yesterday it hit our measured move target of this head and shoulders top pattern that we can see in place here on the daily. So we measured that head and shoulders, we projected it lower, we nailed the target at 285, and yesterday we did close off of the worst levels of the session to form what looks to be a bit of a bullish hammer candle. We do need to see more follow through on that before we can get excited about a potential correction higher, but we are down again by 1.4% today, so looking pretty sick on that. Let's look to the left hand side to see if there's any levels that we can maybe identify as future support levels. Let's take a look at see if there's a fib level from these lows down here that were posted in June 2020 to these highs. So we've actually gone through the 78.6. So the last chance saloon, and it's seldom used, is maybe to look at the 88.6. And actually we can see that although this wasn't a level at the time, there is a cluster of support around this kind of region around here. That's around 249. So that may provide some support on the downside. No real signs of this turning just yet, although there was a decent looking bullish hammer yesterday. We haven't really seen any follow through on the upside with that. So let's see how prices act throughout the rest of the session and maybe revisit that on Monday to see if there's any signs of a bottom forming. Okay, what else should we look at? Shall we take a look at copper? Let's just do that. That's been, looks as though it's formed some sort of bottom pattern on the breakthrough resistance at 396. Prices have continued to move higher towards a 61.8% fib level, and we've spotted a bit of a reversal here. In recent sessions, pricing just been moving sideways, not really going anywhere fast. Potential there for a pullback to retest that newly formed support in that region between 396 to 404. But all in all, looking pretty bullish overall. As you can see, it's trading in a sequence of lower highs and lower lows in the short term. Okay, let's take a look at some currencies then. I'll go through the main currencies and then we'll take a look at some requests. I've got only US dollar versus the South African rand. So if there's any other requests, please feel free to fire them on to the stream. Let's take a look at dollar index to start with. So I mentioned that there's a bit of a bounce on this yesterday, and it's hardly anything to get too excited about. We can see a bit of green over the last couple of days, but nothing really suggesting that there's any kind of reversals in place. So we did have some support around 101.52. We've got this support here, which is actually an unfilled gap from back in May 2022. That's at 101.30. So if we get a test of that level, then that may trigger some buying interest on the speculative basis. We have obviously seen a pretty dramatic move lower in the value of the dollar index. So at some point you would expect to see some sort of correction. I've got an arrow drawn on here because I believe if any correction does materialize, this would be the kind of the first target on the upside that I'd be looking for, and that's at 103.45. So yeah, decent bit of support, but need to see a bit more, I think, before we can get too excited about a reversal. Let's take a look at euro US dollar. That's coming up just shy of this 50% fib level, which is at 109.42. And that goes back to the start of this big down move on euro dollar, which started back in January 2021. Big move to the downside throughout the year, then a decent correction, which is underway now. Very close to the 50% Fibonacci retracement level of that move, which is at 109.42. In terms of price action over the last couple of days, nothing to be too worried about, I don't think, at the moment. No sort of big reversals, no multi-candlestick reversals. We do have an upward trend support line that today, if we were to take where that would go, it would be around 107.33, which also roughly coincides with these highs here, actually. So a pullback intraday to those kind of levels is likely to attract buying interest, I would say, in the short term. If we get a break of this short-term upward trend, then we might see further losses on euro US dollar, but it's a bit difficult to call that either way at the moment. Similar situation with cables. So we're banging our head up against this resistance at 124.30, which is this blue line here. Price is unable to get through that. A few stalling candles in recent sessions and unable to break through at the moment. If we do get a breakthrough, then we can start looking for a move up to this 61.8% fib level at 127.57, but no signs of that for now. All in all, the trend remains pretty bullish in the short term. So any pullbacks to this kind of region down here today, which is around 121.83, may attract fresh buying interest and may give it enough impetus to eventually break through that resistance at 124.30. Alternatively, if we get a break below the trend line, that could trigger further losses in the short term. Let's take a look at Aussie yen, see what's going on there. So that's rallied into a previous high that was posted back in August 22. Now, what we did yesterday on this one, which is quite interesting, is actually posted a new high above that level, but closed below it. So what we have here is a bit of a swing failure. So we've attempted to swing above the recent highs, but failed to do so and actually closed below it, which may indicate a bit of selling pressure at that level and potentially could signal a further pullback in the value of this currency. Now, obviously, we've seen some support on dollar index. Nothing really to suggest a reversal in any major scale, and that's similar to what we're seeing here as well on Aussie US dollar. We've hit some resistance, but nothing really to suggest that there's a massive follow through on the downside about to materialize. But this is one to watch potentially, given that we've seen that swing failure and posted that doji candle yesterday, having hit a major resistance level. It is also just above a 61.8% fib level, which is quite interesting too. So let's see how prices form over the coming 24 hours on that. Okay, should we take a quick look at dollar yen? So that's trading outside of the bearish channel at the moment. We've seen a small pullback, but there is a major level of resistance here at 130.39, and prices are failing to overcome that. Again, all comes down to what happens with the dollar index here, really. We found some support there. And if it does start to follow through to the upside and starts to correct, then we could see a decent move higher on this as well, potentially as high as 134.50. Okay, going to leave it there for currencies unless there's any other requests. I'm going to take a look at the US dollar versus the South African rand. So I took a look at this earlier in the week following a couple of requests. So hello to our South African friends that are watching. So looking at the price action here, let's just zoom the chart back a little bit further. We can see that the US dollar ultimately has been outperforming the South African rand for a long period of time, and the overall trend is higher. We can see here that prices topped out at 1857, and we can probably get a short-term trend line on there, which suggests that prices actually broke down through that trend line there, which was back in November, forming a small top as well. We can see here that there's a bit of a topping formation that eventually formed, and we broke down through the support there to give us an early indication of a top forming back in November as well, before eventually then breaking the upward trend. So that chart's now getting a bit messy, so let's clean this up. So in recent weeks, it looks as though prices have been pulling back in a consolidation fashion. We've pulled back roughly to a 38.2% fib level in a shorter term time frame, and a deeper 38.2% fib level on a longer term time frame. So kind of in this band here, we're expected to find some support, which we have. And below that, we've got a 50% fib level as well. And arguably what you could say over the last few sessions is that prices are attempting to break out of this wedge type formation, indicating that maybe we are actually going to see a continuation of strength in the US dollar versus the South African rand in the short term. But I think really to get fully behind this, I'd prefer to see a break above 17,374. So we have seen some support on the dollar index, and that is maybe being seen here. If we do get follow through in the dollar index, then it's likely that the overall trend is going to start pushing higher on this particular pair. If, however, we do continue to see further dollar weakness, then there's no reason why we couldn't see a further pullback towards these fib levels in between kind of 1648 to 1658, and potentially over the longer term, an even deeper pullback towards these 61.8% and 50% fib levels. So the two time frames that I'm looking at here for the fib levels are these lows that were posted in June 2021 and this low that was posted in March 2022. So I've got fib levels drawn on both. I've got a nice confluence of levels at around these levels here, which is around 16. And also that marries up with that long-term trend line as well. So eventually I think a pullback into that region there could potentially play out. But in the short term, it looks as though we're maybe trying to form some sort of wedge, which may push prices a bit higher. So in fact, I'm going to redraw that wedge, because here I get multiple touch points. From this high on December the 1st, we get a touch point on the 19th, the 20th, the 24th, and today on the 27th. So I think that's maybe a little bit more reliable. And then maybe we can look at a horizontal level being around 17,227. So if we can get a closing break above that on the daily, that may indicate that we're going to see some higher prices potentially towards that 1787 level. Hopefully that was useful, guys. I don't really cover dollar rand too much, but yeah, when it comes to charts, I'm happy to look at anything, and hopefully that gives you a bit of an idea about what I'm thinking with that. To be interested to know your own thoughts as well, if you wanted to post them up on the stream. Yeah, please feel free to keep getting involved and asking the same question. I'll do my best to cover it. Okay, let's take a look at indices. Let's start off with the ASX 200. So this is the Australian benchmark index. We can see here that prices have broken out through resistance at 7382 and have continued to move higher, posting a bit of a reversal today, a bit of red on the screen, engulfing some of the gains that we saw yesterday. But all in all, price action looks pretty constructive. We formed a decent double bottom here on the breakthrough resistance at this level here, which is on the 10th of November. And then we saw a corrective channel before a decent break higher, and prices really accelerated to the upside. So no concerns there. Pullbacks towards 73.82 may provide opportunities to buy. Let's take a look at DAX. So pretty sideways stuff on this. So all in all, price action pretty constructive. It looks as though we formed a decent looking bottom, broken through the neckline of that pattern at 14,576. I've got this red band drawn on the chart here, which indicates support. So I'm looking potentially for a pullback into these kind of levels to maybe look at getting fresh buys on. Price action, lots of long wicked candles and indecision around here, but prices are consolidating, which typically we like to see when breaking out through new or previous resistance levels. So hopefully we'll see that act as support on the downside and may provide further opportunities on the upside over the more medium term. Let's take a look at the FTSE as well. We can see here that prices are attempting to pull back towards this support zone that we've got around 76.70. So that is a previous resistance now turned support, and also this short-term uptrend line. So confluence there of levels to potentially target. A pullback into that region, I think, providing we get some decent buying interest, could trigger a wave of fresh buying for an attempt and an assault at this previous all-time high at 7903, and that's in red there. So all in all, looking pretty constructive there, looking for pullbacks to buy dips. US markets are the ones that are interesting us most. So yesterday we saw a really decent move higher on the S&P 500, following that massive reversal that we saw on the previous session. That was Wednesday. This was Thursday's price action, breaking through the downtrend that's been in place for many, many weeks, going back to January 2022. So we've broken through that really quite nicely, and that may now suggest that we formed some sort of short-term bottom on the S&P 500 index. So potentially looking for pullbacks to retest the reverse side of that downward trend before maybe we see higher prices towards resistance at 4325. So that's looking pretty good indeed. NASDAQ not quite there. As we know, this was lagging behind the S&P 500, but it's at the trend resistance line. Yesterday, we butted up against that. I arguably closed above it by a few ticks. Need to see some follow through on that. I think the major level that I'm watching is this 12,092 level, which if we can break above, confirms a triple bottom formation, and we can start looking for higher prices towards our measured move target of that triple bottom, which comes in somewhere around here, which is 13,751. So from a percentage basis, potentially looking for around 15% upside on the NASDAQ if it can break through that resistance at 12,090. So starting to look a little bit rosier on the US markets. Let's take a look at Dow just to finish up. So we've already broken through the downtrend on this. This happened quite some time ago. This has been the outperformer in the US. We've seen a pullback to the reverse side of the trend line, which has held very nicely. In recent times, prices have been quite range bound. If we can start taking out these resistance levels around here, so around 34,295 to 34,660, then we can potentially looking at a fresh move higher back towards the all-time highs on the Dow, which was hit last January. So yeah, it's starting to look a little bit more constructive on these US markets, which is welcome relief given how rubbish 2022 was. And there is an age-old saying when it comes to stock markets that as goes January, so goes the year. Basically, if January is a good month, that can suggest that the rest of the year can be a good year. And if we look at last year, January was awful. That's when we started this big decline lower, following obviously external influences from the ongoing issues with Russia and Ukraine. But yeah, it's been a pretty good start to January. So let's hope that we can continue to see some more bullishness in these stock markets. Okay, gun to the head challenge. This is where I will pick a trade idea live on the video. and hope to make a bit of a return between now and 9 o'clock UK time. So the idea is that I pick a trade idea as if I had a gun to my head. What would I trade right now? I must pick a trade idea with a stop and a target and a risk reward ratio that's better than 2-1. Now, we've done almost 800 episodes of Talking Ball, so we've been doing this challenge for a significant period of time. But one of the new twists that we've got for 2023 is that we're actually now doing this with real cash. So we put £2,000 into a trading account at the start of the year. I know it's not huge sums of money, but the idea is that it is just a bit of fun. And we want to try and showcase that we can pick trade ideas with good risk management and hopefully make a return over the coming year. So far, the account balance is down at 1,952, so around £48 offside from where we initially started, which isn't a disaster because we're looking for 2-1 risk reward ratios on these trades. So we're going to essentially be risking £19.50 per trade. We're going to risk 1% of our capital. We're only one good win away from getting this account back on side. And if we can hit a bit of form, and pick a few winners consecutively, then all of a sudden this account balance will start to build quite nicely, as it has done on the simulated versions that we've been running over the last few years. So yesterday's trade, I picked an idea on, let's get the transaction history up. I went I went short of New Zealand dollar Swiss franc. And I sold that yesterday. And at 9 o'clock, when we closed this trade out, it was offside £11.05. Previous day, it was up £27.31 on a euro sterling sell. So let's have a look at what we can do today. And in fact, let's just bring up that New Zealand dollar Swiss franc chart and see how that played out. I looked at it on an intraday chart. This was the hourly. So I was selling into these cluster of candles. We can see some long wicks that were forming, and at 9 o'clock I was closed out for a small loss. The trade did eventually go on to hit my stop loss, but because we had this cut-off period at 9 o'clock, the loss wasn't a full 1R, so I'm quite happy about that. Let's take a look at price action now on both daily and hourly to see if we can find something that looks quite interesting. So maybe even New Zealand dollar Swiss franc is reversing for me again today. Let's take a quick look. Let's flick through a couple of currencies. I've got nothing that was pre-prepared, so this really is on the fly. Let's see what I can come up with. Ideally want to find some support and resistance on the daily chart to give me then a bit of a bias, and then I can find something to go with on the right. Let's have a look at this, shall we? Euro Oz. So okay, so let's take a look at the daily here. So a big double bottom pattern formed on Euro Oz, and we broke through resistance back in October, and since then prices have had a few goes at trying to move higher, but eventually dragged back towards this major support. So it has overshot the official neckline of the double bottom, but what we can see here is if we draw a line on the chart is that we've seen multiple retests of this level here at 152.70. So we saw it in November, a couple of times in November actually, then again in December, and every time prices have stabilized at that level before bouncing higher. So if we take a look at the price action today, we can see that yesterday we attempted to move lower to that level. Yes, today we've tagged it, and if we take a look at the intraday charts, we can see that there's maybe a bit of a reversal forming here. So is there potentially a bit of a wedge forming here? Something like this, which may be indicating that we've got a little bit of a bottom in place. And given that we've got that major support on the daily chart, gives us a little bit more confidence. So I'm going to have a go at this, I think. I'm going to buy Euro Oz with a stop below this morning's lows. And then I've got a target and move on the upside. So what we're going to go with here. So we can see this swing move down here. Let's see if we can get a fib level that goes alongside that from those highs to those lows. Let's get the usual ones up, the usual candidates. So the 38.2s, 50%, 61.8. The 38.2 is the closest one, but doesn't quite give me enough from a risk reward perspective. I want at least 2-1 out of these trades. So I'll tell you what, I'm going to go for a move up to just above the 50% because there's a level here This candle here, we saw this big impulsive move lower, roughly 50% of that candle, and also that low prior to that move lower comes in at 155.20. So that gives me a risk reward ratio of 3 to 1. So I'm always happy with those. So let's see if we can get a decent correction higher in Euro Oz, shall we? So I'm going to get that on. It's going to switch my symbol, so I'm going to have to redraw all of this, which is really annoying, but it just reinforces what I'm looking at today. So a bit of a wedge going on here on the intraday, breakout there, and there's the lower end. Let's get that drawing on. So there's the trade setup, looking for a move to that level, and going with a stop loss just there. Okay, let's get that on. Happy with that. So buy, take profit, stop loss. Take profit is going to be at 155.20. Stop loss is going to be at 152.60. My risk is going to be 1%. So I'm risking £19.52 on this trade. Boom, we're on. We're buying Euro Oz. That's my trade of the day. As if I had the gun to my head, that's what I'd buy right now, given what I've seen on the daily chart. Just to go back to that again. Major support here around this level, which seems to have done a pretty good job. Going further back, we can see that we completed a double bottom. So we've got the bottom here, neckline up here, broken through that, pull back to test that level. I know there might be a few people that are screaming that this might be a bit of a head and shoulders forming here, but it hasn't broken yet. It's only a head and shoulders if it breaks that neckline, and it hasn't done that. It's found support there. So I'm going to give this a go today, and like what I see on the intraday charts to go with that as well. So that's my trade of the day. Okay, data-wise, what have we got out today? We've got the US PCE prices index, which is an inflation number. Consensus forecasts are for the year-on-year rate to decline to 4.4% from 4.7% previously. So it does come in less than what it was previously. That indicates that maybe inflation still is or has peaked, and we are going to start seeing that cool off a bit, which will be encouraging for markets. So priced in, I would say, given that the expectations is for 4.4%, it's probably priced in. Anything less than 4.4% would be considered quite bullish and suggest that inflation is starting to ease even further. Next week, we've got a number of data points out, starting off with the ISM Manufacturing Index on the 1st of February, which will be Wednesday. We've also got then the US Federal Reserve policy decision, so interest rates in the US, and obviously any statements that follow that up as well. Then we've got the same from the Bank of England on the Thursday, and then the ECB on the Thursday as well. And then Friday, we've got the US non-farm employment report. So it's going to be a pretty hectic one next week. Lots of central bank action, as well as that big non-farm number as well. So lots to look forward to. Hopefully plenty of volatility for us to take advantage of. In the meantime, guys, I hope you've had a great week, and I hope you have a fantastic weekend. Thank you very much for watching and getting involved this week, and I'll be back next week with Steve. Have a good one, guys. Bye-bye.